Since no nation has ever left the EU before, no one knows for sure what the economic impacts could be if Britain pulls out. But what is certain is that economies around the globe, not just in Britain or Europe, could feel some tremors, some dislocation. That's a fact not lost on Fed Chair Janet Yellen, who has weighed in. So what might the vote's impact be on the U.S. economy and markets? Sara Eisen tells us from London tonight.
Voting begins tomorrow in what British leaders are calling a once-in-a-generation vote. The results will be felt far outside the UK, including potentially on the U.S. economy. The UK is America's seventh largest trading partner. We export about $57 billion worth of goods to the UK and import a little more than that from the UK, mostly cars, medicines, alcohol, and other big auto parts. Now, when it comes to the portion of overall trade for the U.S., the UK represents 3%. So it's not a huge chunk of our trading activity. Still, if the British economy does decline, if Britain votes out, it could hurt a key source of demand. Several economists, including most notably the chairman of the Federal Reserve, is concerned about the fallout.
It would usher in a period of uncertainty, and it is very hard to predict, but there could be a period of financial market volatility that would negatively affect financial conditions and the U.S. economic outlook. That's by no means certain, but it is something that we will be carefully monitoring.
The other impact could be a weakening of the British pound if Britain does vote to leave. Hedge fund manager George Soros, who has a pretty strong track record betting on the British pound or against it, made $1 billion back in 1992, says we could see a 20% devaluation for the pound if Britain leaves. That would mean a much stronger U.S. dollar and could be painful for any multinational American company that does business here in the U.K., already suffering from the effects of the stronger U.S. dollar. But the real concern for the U.S. economy is financial market distress, widening credit spreads, falling stocks, the strengthening dollar, buying of safe haven assets like U.S. Treasuries. That's what economists fear could end up ultimately hurting the U.S. economy. It doesn't help that the economy already doesn't have much of a cushion. We're barely growing 2%, and the Fed is already working hard to keep the stimulus flowing and interest rates low. That's why another key reaction is certainly going to be European stocks and the euro, because in that case, we're talking about a $16 trillion economy, just about the size of the U.S. For Nightly Business Report, I'm Sara Eisen in London.